This conversation is powered by Google Illuminate. Check out illuminate.google.com for more. Welcome to this discussion. We'll be exploring Warren Buffett's 2024 Berkshire Hathaway shareholder letter, focusing on his tribute to Charlie Munger and his insights into Berkshire's investment strategy and performance. What immediately strikes you about Buffett's portrayal of Munger's role in Berkshire's success?
Buffett paints a compelling picture of Munger as the visionary architect behind Berkshire Hathaway's success, while he himself acted as the general contractor, executing Munger's strategic vision. This highlights the importance of both strategic thinking and effective implementation in building a successful long-term enterprise. The humility shown by Buffett in acknowledging Munger's crucial contribution is also noteworthy.
The letter uses an interesting framing device, Buffett's sister, Bertie, as the ideal shareholder. Why do you think he chose this approach?
Using Bertie as a proxy for the average Berkshire shareholder allows Buffett to communicate complex financial concepts in a relatable and accessible way. He avoids overly technical jargon, focusing instead on clear explanations and practical insights that resonate with a broad audience. It's a clever way to personalize the message and connect with his investors on a human level.
Buffett spends considerable time discussing the difference between GAAP net earnings and what he terms operating earnings. What's the key distinction, and why is it important?
The core difference lies in the inclusion or exclusion of unrealized capital gains and losses. Buffett argues that including these volatile short-term fluctuations distorts the true picture of Berkshire's underlying business performance. He prefers operating earnings as a more stable and reliable indicator of long-term value creation. This reflects his long-term investment philosophy.
Buffett emphasizes the importance of good economics that are fundamental and enduring in his investment choices. Can you elaborate on what constitutes good economics in his framework?
For Buffett, good economics refers to businesses with strong, sustainable competitive advantages, allowing them to generate high returns on invested capital over the long term. These advantages might stem from factors like strong brands, efficient operations, or unique technologies. He seeks businesses that can consistently reinvest profits at attractive rates, driving further growth and value creation.
The letter highlights the challenges Berkshire faces due to its immense size. How has this impacted their investment strategy?
Berkshire's sheer size limits its ability to find companies that can significantly move the needle in terms of overall performance. The pool of suitable acquisition targets has shrunk considerably, making it harder to replicate past successes. This necessitates a more selective and patient approach to investment, focusing on a smaller number of high-quality opportunities.
Buffett mentions several long-term holdings, including Coca-Cola and American Express. What makes these investments so compelling in his view?
These companies represent classic examples of businesses with enduring competitive advantages and strong brands. They have proven their ability to adapt and thrive over decades, generating consistent earnings and dividends. Buffett's long-term perspective allows him to ride out short-term market fluctuations and benefit from the long-term growth of these established enterprises.
The letter also discusses Berkshire's investments in Occidental Petroleum and 5 major Japanese companies. What are the key drivers behind these decisions?
The Occidental investment reflects Buffett's belief in the importance of domestic energy production and carbon capture technologies. The Japanese investments highlight his appreciation for shareholder-friendly corporate governance and the potential for international partnerships. Both decisions demonstrate a willingness to invest in sectors with long-term growth potential, even amidst uncertainty.
Buffett provides a detailed breakdown of Berkshire's operating results in 2023, highlighting both successes and disappointments. What were some of the key factors influencing their performance?
The insurance business performed exceptionally well, exceeding expectations. However, BNSF Railway and Berkshire Hathaway Energy, BHE, experienced earnings declines due to various factors, including increased wage costs, regulatory challenges, and the impact of forest fires on BHE's operations. This illustrates the inherent risks and uncertainties involved in even the most well-managed businesses.
The letter concludes with a reflection on the Omaha Effect, suggesting a connection between the city and Berkshire's success. What's your interpretation of this observation?
Buffett's playful reference to the Omaha Effect likely highlights the importance of cultural factors, such as a long-term perspective and a focus on value creation, in shaping Berkshire's investment philosophy and success. It's a lighthearted way to emphasize the importance of long-term thinking and avoiding short-term market pressures.
Buffett's sister, Bertie, serves as a powerful example of a long-term investor. What lessons can we learn from her investment approach?
Bertie's success underscores the power of long-term investing, patience, and a focus on fundamental value. Her decision to concentrate her investments in a mutual fund and Berkshire Hathaway, avoiding frequent trading, allowed her to benefit from the power of compounding returns over several decades. This highlights the importance of discipline and avoiding emotional decision-making in investing.
The letter emphasizes the importance of extreme fiscal conservatism and avoiding permanent loss of capital. How does this principle guide Berkshire's investment decisions?
This core principle underpins all of Berkshire's investment decisions. It means prioritizing investments with a high margin of safety, avoiding excessive risk-taking, and maintaining a strong financial position to weather economic downturns. This conservative approach has allowed Berkshire to survive and thrive through various market cycles.
Buffett mentions the importance of being prepared for market seizures and economic downturns. How does Berkshire position itself to navigate such events?
Berkshire maintains a substantial cash position and a diversified portfolio of businesses, allowing it to withstand significant economic shocks. Its ability to deploy capital quickly and decisively during periods of market distress provides a competitive advantage. This preparedness is a key element of Berkshire's long-term resilience.
This has been a fascinating discussion of Warren Buffett's 2024 shareholder letter. Thank you for sharing your insight.